Good day, everyone. Thank you for joining me. I'm Tamara Kukshinovich, and I'm going to take you through Truworths interim results. Truworths is a quality retailer with consistently high operating margins, historically strong cash generation, a very high return on equity of around 25%, and an ungeared balance sheet. The return on equity is under pressure as a result of muted top-line growth. Stronger top-line growth remains the group's biggest challenge and is affected by economic activity and merchandise inflation. The short-term retail environment is unlikely to improve due to high personal debt levels, a complicated regulatory environment, and slow economic growth. But merchandise inflation should benefit from a weak exchange rate. Credit sales are the main contributor to earnings and will most likely be impacted by the changes in regulations. Trading in the group's UK operations is tough due to complications surrounding Brexit. We feel that these concerns are fairly reflected in the current valuation. As you can see on the graph, the counter is trading at a discount to its historical averages and peer multiples. The share price is underpinned by an attractive forward dividend yield of 5.7%. Trading at a forward PE of 12 times, we feel that the counter offers value and would recommend an overweight exposure. Group retail sales increased by 2% to R10.5 billion due to the weak economic conditions locally and in the UK. Account and cash sales increased by 3.7% and 0.3% respectively. Trading space increased by 0.8% and product deflation averaged 1.5%. Gross profit remained stable at R5.3 billion, translating into a gross profit margin of 52.3%, which was within target range. Operating profit decreased by 3.5% to R1.6 billion due to an increase in trading expenses. The trading margin decreased to 16.1%. Interest received dropped by 21.2%, mainly due to the rise in accounts opened. Interest paid decreased significantly by 69.9% due to the funding restructuring. Diluted headline earnings per share decreased by 5.1% to 360 cents per share. An interim dividend of 249 cents per share was declared, which was a 5% decrease relative to the previous year. Cash generation was strong for the period under review. The group generated R2.6 billion from operations, which enabled the funding of dividend payments, loan repayments, and capital expenditure. Expansion capex amounted to R190 million, which comprised acquisition of land and buildings, refurbishment, and the purchase of Plain Street Park. Total cash increased by R1.7 billion. Creditors and tax payments were made after the current period end, which enhanced cash inflow from operations. If the impact was considered, R250 million in cash was generated. The net asset value increased by 8.5% to 2,622 cents per share. The return on equity and return on assets were above target range at 29% and 26% respectively. Office inventory turnover decreased to 4.6 times due to the harsh trading environment in the UK. Inventory turnover excluding office increased to 5.8 times, and asset turnover was within target range at 1.2 times. Interest-bearing borrowings decreased by 57.7%, largely due to the funding restructure to achieve a more efficient and cost-effective capital base. Considering the default risk rating, the balance sheet risk remains low, and at the end of the period, the group was in a net cash positive position due to the timing of the creditor and tax payments. Strict lending criteria has led to improved quality of the trade receivables book. The number of active accounts opened increased by 3.7%, which translates into an increase in account sales. Gross trade receivables increased by 1% to R6.4 billion. Accounts open to applications ratio decreased to 23% due to the strict lending criteria applied. Overdue values as a percentage of gross trade receivables remained stable at 10%. Doubtful debt allowance as a percentage of gross trade receivables increased to 18.8% due to the adoption of IFRS 9, which increased the doubtful debt allowance. In conclusion, we would recommend an overweight exposure relative to the capped SWIX, which has a weighting of 0.6%. If you would like to place a trade, please speak to your financial advisor or contact the dealing desk. A comprehensive company analysis report on Truworths can be found on the PSG online trading platform. Before we end off, please take note of the following disclaimer. Thank you.